Warren Buffett. Warren Buffett is a top subject of today's video. A lot to get into in this one here today, folks. Right off the top, we're going to talk about Warren Buffett buying heavier than literally ever. We're going to get into that, okay? Second thing, I want to show you guys some crazy moves that are going on in some commodities and stocks out there. Number three subject we'll talk about is I've been asked recently about a specific stock and if I'm interested in selling that stock, or some people said now's a good time to sell the stock. I'll speak about that, okay? I'm also going to talk about a new stock I'm buying in this video and kind of what I'm looking at with that stock. We're going to talk about Tesla stock. There was some news that came out in regards to Tesla here today that I want to share my opinion on. And last thing we'll talk about is Palantir in today's video as well. Hope you guys enjoy this as always. I appreciate everybody subscribe to the channel. Thanks for being here. I am feeling a lot better. Thank you everybody for the well wishes. I appreciate y'all. It means a lot. And yeah, I mean, if I'm not back to 100%, I'm feeling pretty dang close. Let's put it that way, okay? So yeah, thank you guys for being here as always. Already, right off the bat, Warren Buffett. So interesting, right? In 2022, what did we see? If you were in the market last year, you know what you saw. You saw Wall Street dumping everything in sight, right? Except really maybe like oil and gas stocks, but just about everything else. Wall Street was dumping everything in sight, right? Retail was selling everything. They were completely leaving the market. I think Robinhood lost, I think it was, I don't want to say half their users, but I think it was pretty darn close to half their users. I believe they lost over 10 million users last year, right? And so you saw Wall Street dumping everything in sight. You saw Wall Street selling everything. You saw Wall Street leaving the market completely, right? And think back to, late 2020 into early 2021. Warren Buffett was getting a lot of hate during that hype kind of blow off the top cycle there, because Warren Buffett wasn't out there buying, and a lot of people were making a lot of money in the market at that particular time, right? And Warren Buffett chose to stay on the sideline. 2022, we get a completely different scenario. Wall Street's dumping everything in sight. Retail selling everything and leaving the market. And what happens? Well, Warren Buffett, Berkshire Hathaway, bought nearly $70 billion and spent nearly almost $70 billion on stocks in 2022. Meanwhile, the famed investors company slashed its share buybacks, but still deployed a chunk of its cash reserves. Berkshire poured an unprecedented $68 billion into stocks. That is a record amount over the course of 2022. Isn't that incredible, right? To see something like that, and it just goes to show you, like, it seems like this just happens over and over again, right? Wall Street money, retail money, they sell to the folks that know what they're doing in the market, right? And I think we'd put Warren Buffett into the category of knows what he's doing in the market, right? And so just feel very comfortable that if you were out there taking advantage of a lot of great deals that we saw last year, right? Which, I mean, gosh, go back to the fall of 2022. What wasn't trading at a good deal? I mean, you had Tesla, you had Meta, you had Nvidia, you had AMD, you had Apple, you had Microsoft, you had everything at your disposal there, right? And just understand, if you were taking advantage of those deals last year, you were buying alongside, obviously a great investor like a Warren Buffett, right? He might not have been buying those same stocks, because some of those stocks aren't Warren Buffett type stocks. Let's just be honest, right? Some of those aren't his type of stocks. Some of those are. But at the end of the day, like, that man was buying heavier than we've ever seen him buy last year, while everybody was selling. It's interesting. It's interesting how that works, right? And it just goes to show you, it's just a transfer. It's just a transfer of assets from one group of individuals to another group of individuals. That's really all it is. And when you look at Warren Buffett's portfolio, right, the Berkshire Hathaway portfolio, I mean, it's incredible how many significant stakes of companies he owns, right? DaVita, he owns almost 40% of the entire company. Kraft Heinz, he owns 26% of the company. Occidental Petroleum, they own 23% of the entire Occidental Petroleum. Liberty Media, 20%. American Express, he owns 20% of American Express. Think about that, right? All those transactions going through. I mean, it's incredible, right? Moody's, he owns Moody's, which, yeah, I'm surprised he owns that. Warren Buffett, I guess they make a lot of money, right? Do they know how to rate companies? Probably not, to be quite honest, but they make a lot of money, so I guess it's all about the business model, right? Bank of America, he owns almost 13% of the entire Bank of America corporation, right? HP owns 12%, Verisign 12%, BYD owns almost 12% of the EV maker there, right? RH Restoration Hardware, this is something I was looking at recently, because RH is a stock I'm interested in, but I'm like, why is this stock not falling more? Like, I feel it should be in the hundreds right now. I'm like, why is this baby clinging on? It's got the Buffett. It's got the Buffett under it, man. That's what we call, let's call it the Buffett floor. Okay, he puts a floor under a stock because he owns such a significant stake, and if it goes low enough, like he'll just buy more shares, and that's what happens there, right? He owns 10% of Ally Financial, 9% of the entire Coca-Cola company, 8.8% of all of Chevron stock. And remember, Chevron's going to do a big buyback, so I wouldn't be surprised if his Chevron stake goes over 10%. Kroger. You ever buy groceries before? 7% of the entire grocery company. 6.7% of Activision Blizzard. Now, by the way, if you're wondering, did Warren Buffett really buy Activision Blizzard, a video game company? Highly unlikely. That was more than likely Todd or Ted making that move there, right? He owns almost 6% of the entire Apple Corporation. I mean, you just go through these companies, right? It's just incredible how many significant stakes he has in so many different companies. Absolutely incredible, right? This, guys, matters in a significant way, okay? One way could be looking at it as an opportunity. One way could be on a different front, okay? What you're looking at is natural gas. I would say probably most people that are watching this video right now, you don't keep track of natural gas prices. Well, natural gas prices are trading historically insanely cheap right now. There's only a few time periods I could ever find natural gas basically trading around here or cheaper. 2002, 2012, 2016, right? And 2002 and 2012 were basically at the same number. 2016 was a little bit lower. And then obviously during Rona, when, all commodities basically crashed during, kind of like spring 2020, right? And those are the only time periods in the last 25 years that I could find natural gas trading around here or lower. Think about that for a moment, okay? So one side could be an opportunity for to maybe play nat gas, right? But people are getting screwed on their gas bills still. And the reason you're getting screwed is because these gas companies and everybody else hedged at very poor pricing back in the fall time and late summertime. Because winter was coming, so they start hedging in the summers and fall, and they were hedging at horrible prices, $6, $7, $8, $9. And so if you're wondering, why is natural gas so low, but my natural gas bill, right, my gas bill is so high? It's because these companies and everybody hedged at horrible prices. Now, the good news is, next year, gas prices are going to be significantly lower, and I mean epically lower than what they were this year. But unfortunately, everybody's gotten screwed bad, and I mean bad this winter. And when it comes to hedging, right, in hedging commodities and things like this, it's great when, let's say, something's getting more expensive and you hedge at a lower price. It's phenomenal, right? It's a thing of beauty. But this is the worst situation you can have. When natural gas people were hedging at the worst prices possible, locking in contracts at the worst prices possible, and then you have nat gas now on the floor and people are looking at it and like, why is nat gas like pretty much around the lowest it's been in 25 years, but yet my natural gas bill is astronomically high? It's a very frustrating ordeal for folks, right? And ultimately, it steals a lot of folks' money in the short term, right? But over the longer term, I can tell you this is a good thing, because next year, your gas bill is going to be likely significantly lower. And not by a little bit, but by a massive amount. And likely even you'll start to see improvements if you just have natural gas stoves and things like that as kind of this year ticks on, right? Now, when it comes to big tech, I just thought something interesting was Google and Meta, the underperformers of the bunch, which Meta, I mean, this stock has been on fire. If you go back from where the stock was in November through now, I mean, it just seems like every day the stocks go up. So finally a pullback there, maybe, I don't know, worries about the advertising market or something like that. But it was interesting to see those two, actually the two worst stocks of big tech here today. Banking stocks had a nice green day here today, so that was just interesting kind of seeing how all that played out. It seemed like a little more risk on banking plays. And as long as the drama calms down in banking, the banks, as far as the stock prices, will continue to improve over the coming weeks and months. But that's if this drama subsides. If every single time you hear about bank runs and blah, 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 believe me, the stocks are going to fall. It's just the way it is in the short term, okay? Now, ELF stock. Somebody asked me, or they didn't ask me. Actually, there was a few people that have either asked me or suggested to me to sell ELF stock, okay? And you need to sell ELF stock, you're up huge on it, blah, 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 okay? And here's my perspective on this. The stock just keeps going higher. It seems like day after day after day after day after day after day, right? It's incredible, right? I will tell you this. Am I going to sell ELF stock? The answer to that is absolutely not, okay? despite being up nearly 1,000% on the stock. Here's the deal with ELF, okay? And here's the deal, and this is a very important point I'm about to make for everybody. I don't care if you've been in the market for 10 years or 10 days, okay? As somebody who's been doing this for 15 years now, my biggest mistakes have always come from selling stocks and taking profits in companies that are far outperformers when it comes to their businesses, and their management teams do far better than expected. Those are always my biggest regrets. I'm always willing to deal with a loss on a stock, making a mistake. As a stock market investor, you're going to make mistakes. You're going to lose money sometimes. It's part of the process. It's part of the game. There's no way around that. It's like being a boxer and expecting not to get hit in the face. Like, you're going to get hit in the face, okay? So I'm accepting of that. But something that frustrates me is when I sell stocks, and then I go on, and those stocks were great companies, so well run, amazing numbers, and I sold, and then those companies just continue to prosper and prosper over time. When you look a little deeper into ELF's numbers over time, you begin to get educated on why this stock just goes up and up and up and up. It's not like this stock just magically went up 1,000% for us. This is their latest Q3 results. Their net sales were up 49%. Who's putting up 49% growth in this environment right now? The only company I can think of off the top of my head that has better growth than that is Avant. It's the only company I can think of right now in this environment, right? 180 basis points. That's 1.8% gross margin improvement. It's an incredible number. 69% adjusted EBITDA up, right? So way outstripping net sales. It's incredible. But it's not just one quarter. Look at the past years for the stock. This is basically my whole life in the stock, essentially, right? 3%, 7%, 11%, 8%, 16%, 8%, 7%, 10%, 24%, 50%, 27%, 11%, 13%, 26%, 33%, 49% growth. 16 consecutive quarters of net sales growth for this company. They execute on the highest level possible. So why would I sell more shares of stock? I already sold most of my shares in the stock, a long time ago, and I regret it horribly. Horribly. You don't even know how many ELF shares I used to own back in the day. I could pile them up to the roof, okay? And I made a bunch of money in a very quick amount of time in the stock, and I sold, and I sold, and I sold, and I sold. And I regret every share I ever sold, okay? When you're in companies that are prime time players, you don't cash those babies. You keep them. The problem a lot of us stock market investors get into is we make a bunch of money on a stock, sometimes in a quick amount of time, 6 months, 12 months, something. We see a company executing very well, and then we go ahead and sell, and sometimes we put that money into stocks that aren't good performers, right? And management teams aren't performing. And it's a huge mistake. And I've made the mistake countless times over the past 15 years. And I'm going to make sure I don't make that mistake over the next 15 years. I can tell you that much. I've learned my lesson. I've gotten slapped enough times by selling companies that I knew were going to be great. They became great, and then I cashed on them way too early, okay? 2 examples of 2 stocks before I was ever even on YouTube of 2 companies that fit this criteria that I was a shareholder of. And as of today, I own 0 shares of both of these companies. And it shouldn't be that way because these companies were primetime performers, Monster Beverage, which used to be called Hanson's Natural Beverage, and Cirrus Logic, Cruisy Doozy. 2 great stocks for me that I made a lot of money on prior to even being on YouTube. But I can tell you, I ended up selling all of my shares in those stocks over time. And it was a dumb move. Because at the end of the day, those companies proved to me over time, they were the primetime performers. They put up their quarters, and they were great numbers, almost quarter in and quarter out. And the jobs the management teams did running those companies was great, right? And sure, they had their ups and downs as far as stock price went in the short term. But ultimately, look at where those companies have gone, right? And so let this be a lesson to you that when you are in companies that are primetime players, you don't sell those stocks. You hold them, you keep them in the filing cabinet, okay? And until there's a day when you don't think those ones are a great performer anywhere more, then you can cash them. But you gotta let winners run. And great companies go on insane 5, 10, 15-year runs, okay? Not 5 and 10-month runs. I'm talking 5 and 10-year runs, okay? And so I'm just telling you, like, that's my view of that, and really that's my view of that going forward. There's no need to take a rush and take a profit out of companies that are prime time performers. Because all you'll do is be like me, and you'll look back with regret on this stock, this stock, this stock, this stock, this stock. I mean, the amount of stocks I've been in over time that were prime time players. and I should have never sold them and taken profits. It's a big list, man. It's a big list. And so let that be a lesson to you folks, okay? Now, a new stock I've been buying recently, okay, is Disney. I literally just started a position in this, and it's going exactly as planned, already down 6%, okay? It's always my, it's what I always hope for, okay? As soon as I buy, the shares go down. That usually means it's going to be a winner long term. I get worried when I make money right off the bat. When the stock goes up right away, I start questioning. I'm like, well, something's going wrong here, okay? But in all seriousness, Disney, okay? So when it comes to Disney, I mean, gosh, okay? I don't even know where to start with this one. First thing is, they just announced they're doing their big layoffs, okay? And the layoffs are coming, the 7,000 job layoffs, right? First round's about to start here. No, Bob Iger's back at the company, right? And he basically hasn't been the CEO of this company over the past few years. Bob Iger was the CEO for a long time for this company. From about 2005 to 2020, he was the CEO of this company and did a phenomenal job growing Disney. Stock price did amazing. Revenue did amazing. Net income did amazing. Look at everything across the board, okay? Great job by him, right? He's back now. Now, right now, this company's valuation, it's trading as low as it was in Rona. It's trading as low as it was in 2016. Okay, the stock's been heavily discounted. I mean, extremely discounted. And Bob Iger has now obviously taken back over as CEO of this company, right? Now, when he stepped away, it was a very questionable time, I gotta say. He stepped away February of 2020. It was a very strange time to step away. Why? Well, because at this time, basically, Rona was already a huge thing in China. We were still trying to figure out in the United States of like, what's going on with this Rona thing? Is it serious? Is it not serious, right? We didn't start taking it serious till March of 2020. So he stepped down in February 2020. And there was, if I recall, Shanghai and Hong Kong, they were already shut down at this particular time. And so I think he likely saw that and he's like, this is going to be a mess for the next couple of years. I don't want to be CEO. I don't know. Okay, that's just my hunch. Maybe it had nothing to do with that. But it was a very suspicious time to step down as CEO, okay? And so he got to avoid that whole wave. Now he's back as CEO, right? He's going to right-size the company again. He knows his business inside now. He's going to right-size the company. He's going to cut costs massively. Don't be surprised if their net income goes through the moon over this next few years, right? Parks are 100% open, full capacity, full go around the world again, right? Obviously, he's got their content business heading in the right direction again. So the way I look at this is, this is a perfect situation for him, where he's going to be able to step in, get the company this year fixed, and then it's going to be off to the races over the next few years, and he's going to be seen as, a visionary, a perfect CEO again, right? And it's going to be a very similar phenomenon that we've seen with other folks, like Starbucks CEO Howard Schultz done this in the past. Steve Jobs obviously did this. Steve Jobs was a little different situation, though, because he was kind of forced out of the company, and when he came back, Apple was almost done. Like, Apple was almost in bankruptcy. Disney's certainly not in that situation, right? But you see this sometimes where these CEOs that were respected, then for whatever reason they leave the company, then the company goes on hard times, they come back, they right-size the company, they get the strategies all right, and they fix the day, and they save the day, right? And then they're hailed as visionaries. And so that's my opinion what's going to happen with Bob Iger here. And when in regards to Bob Iger, he's supposedly supposed to only be CEO for the next 2 years. My opinion is I think he's going to be CEO for like the next 5 years, okay? Here's the deal. This is a hard year for them, right? This is 2023 is going to be the year of, having to cut a bunch of jobs, having to cut costs. Oh man, it's so hard. We're trying to right-size the company, doing all this. This is like the hard work year, they call it, right? And then 2024 starts the real growth again, not just in terms of top line, bottom line, everything across the board for this company. Things get a lot better for the business. Stock price starts appreciating greatly. And next thing you know, he starts getting all the praise, stock options. It's a beautiful deal. And so in my opinion, is he really going to leave when things are just starting to get good for the company? I don't think so. I think he's going to want to stay around at least a few more years. So I really think he's going to be in this for about 5 years. That's my personal opinion on it. And so at the end of the day, when I think about a company like Disney, right, and I think about they own the whole freaking world, okay? I don't know what else to say to you, okay? They own the whole world, okay? It's incredible when you really look at how many assets this company really owns. I mean, my gosh, it's incredible. And so when I look at their business model and I look at Bob Iger coming in, right-sizing the company now, getting focused around profitability and margins on every single business, I think he's going to accomplish this in 2023, and I think it's going to be off to the races in 2024. And so I want to be positioned in the stock when we're at multi-year lows, when we're going through all the job cuts and we're going through all the dramatic time, because that's when I'm going to get the lowest shares. I'm not going to get a great deal in the stock when everything's going great again. I'm not going to get a great deal on the stock next year, in my opinion. I'm not going to get a great deal on the stock in 2025. I can tell you that. By that time, the stock's probably going to be $150 or $200. That's my personal opinion on that. And so I need to position into this year, get ahead of that, and beat Wall Street to the punch. Because they'll start piling on as the quarters get better at the very end of 2023, and then as we kind of go along in 2024. So I need to start positioning now when we're at multi-year lows rather than wait on this, okay? And, in terms of acquisitions, I don't think they'll pull off something like this year. But I wouldn't be surprised if they try to make a move on fubo next year. And with my understanding of Disney and with my understanding of fubo also, right, I think it's definitely a possibility. We'll see what happens there. But my opinion on this is fubo is the number one streaming player when it comes to sports-related content. We know Disney owns ESPN. And so I just feel like this is a perfect acquisition target next year for Disney. Fubo's one of those companies that it's like they're still not talking about profitability until maybe like 2025, so it's like way out there, right? But they got incredible user growth, and they've got an incredible revenue growth at this company. And so it just seems like a match made in heaven for Disney to go ahead and acquire a company like this or make a substantial investment. But I think, honestly, Disney would like to just buy a company like this and just expand it. So we'll see what happens there. But that's kind of my opinion on that. Tesla was in the news here today, okay, from the stock side. And here's what happened, okay? Tesla stock is on the move higher as Barclays sees bullish signs for the EV maker's first quarter performance. In a note this morning, analyst Dan Levy projects Tesla's delivering 425,000 vehicles globally in Q1, beating what Barclays sees as consensus estimates of 420,000 vehicles. And that beat could be another catalyst for stock. Levy sees another upside to production as well as writing, quote, "We believe commentary on the pace of production likely implies some upside, which we assume will be 130,000 units in the quarter," something along the lines of that, okay? Now, my opinion of this, I don't really, how do I say this? I don't really care. I don't really care. As long as somebody has been in the stock for many, many years, okay? Whether Tesla, Wall Street loves to freak out and get excited if Tesla beats by a few thousand cars here, a few thousand cars there. As a long-term investor, it doesn't really matter. If they sell 430,000, 420,000, 425, it doesn't make a difference to me. All I want to see is this company's on the long-term trajectory that I believe this company's on, right? That is becoming a company that's going to be selling, many, many, many millions of EVs each year, right? And have a whole, products and services built around how many cars they're selling each year, which is exactly what I see lying up there. So, it's okay, but a lot of this stuff, I'll be honest, a lot of it I don't even pay attention to. I see it out there. A lot of times I don't even cover it because it's like, does a 5,000 cars really make a big difference? To me, it doesn't as a long-term investor. That's just my opinion. But Wall Street, they're going to look at it and they care. Do they beat revenue? Do they miss revenue? Did they beat it the EPS? Did they miss the EPS? Did they beat the margins? Did they miss margins? Okay. Palantir stock, PLTR. Okay. Now, there was an interesting article I was reading on Seeking Alpha recently from this gentleman. He was talking about Palantir and coming his bullish points and why he was buying the stock and whatnot, right? And he was making a point, obviously, Palantir should become increasingly profitable as sales increase and operating costs moderate in the coming years, right? Which is a very similar point that I have brought up over time, right? And he was talking also about the margins of this company are absolutely incredible, right? Palantir's gross profit margin was 79.5% last year. Moreover, if we remove stock-based compensation, the gross profit margin is 81.7%. Palantir's profitability is astonishingly high, implying that the company has become increasingly profitable by optimizing. It will become increasingly profitable by optimizing costs as it continues to expand. And that's kind of my opinion on Palantir in regards to this. I believe this company is going to become incredibly profitable over the next 5 years. And that's why I'm in this stock. The revenue story's cool, and that's a great opportunity in terms of B2G, business to government, right? And B2B in terms of businesses selling to businesses, right? But at the end of the day, their commercial business, that is, right? Selling to other businesses. But at the end of the day, when it comes to Palantir, I'm really in this stock because I view this company as being a cash flow and profit machine over the coming years. We're at the infant stage of Palantir profitability in 2023. I mean the infant stage. And I think, the cash flows, the EPS this company is going to throw off in 2025, 2027, it's going to be pretty remarkable in my personal opinion. That's what I see coming for this company. And so that's why I'm an investor of the company. Obviously, it's a smaller position because it is still relatively speculative from the side of profits, right? Now, something I was talking in the private stock group with recently, okay? I was talking with a few members about this. This is really interesting around Palantir. They were explaining to me really, and this really wasn't even a way I viewed Palantir. They were telling me about how hard it is to get hired at Palantir. And I believe one or two of them actually had tried to work at Palantir. And I think they ended up working at Google or other tech companies over time. But it was fascinating to me because they basically said Palantir is the hardest to get hired at. Like you can get a job at Meta, Google, like any of these other companies before you get a job at Palantir. That's the way it's been over the years. And so that was fascinating for me to hear like how hard it is to get a job at Palantir. And I wonder who has the most talented workforce out there. And I've got to say, I think Palantir's probably got one of the most talented workforces that goes under the radar, that people don't really hear about that much. Because Palantir's not really in Silicon Valley, right? And they're kind of out of that mainstream, massive company conglomerate of Apple and Meta and Google and all those companies kind of in the Silicon Valley area. And so that's interesting. You've got to many times think about workforces. And I've seen, and I've been fortunate to know a lot of people that work for Tesla, right? And I've been able to see the talent levels at that what Tesla has. It's incredible. The amount of talent Elon Musk has been able to attract at Tesla over time. And then I start to think about like Palantir being arguably the hardest company in the world to get a job at. And I just think about, wow, what levels of talent and intelligence does a company like that have versus any competitors or any companies in general, right? So I do think about these things, and I think it does play a part in an investment thesis, right? The workforce, because at the end of the day, a company can only be as good as their workforce is, right? Strategy, marketing, sales, all this stuff matters. But so doesn't like who's actually building your products and services. That matters in the most way possible, right? So yeah, I thought that was interesting having that conversation, a few days ago and whatnot in there. But yeah, I appreciate everybody joining me as always. If you're looking to apply to join my private stock group, looking to kind of fast track your knowledge on how to build your portfolio, how to scale, those sorts of things. If you have goals to get to 6 figures, 7 figures in the market, then definitely consider applying for my private stock group, the private wealth group. That's a pretty extraordinary opportunity. That will be the pinned comment down there. If you're also looking to support the channel just in general and you want to be part of my Patreon, see what moves I'm making in the market, there'll be pinned comment as well down there. I appreciate everybody joining me as always. Much love and have a great day.